So, hi everyone. I'm here with Billy Holliday today. He's from Invevo. He's the chief product officer and co-founder. And you guys are in the accounts receivable space and the accounts receivable technology space. So Billy, thanks very much for joining me today.
Thanks for having me, Chris.
So I suppose I wanted to start off first off talking a bit about maybe some of the things that you're seeing with your clients in the accounts receivable space, especially as we're looking into the face of what is seeming like an economic downturn.
Absolutely. I think what we're seeing across the board is very much risk mitigation. I know it's a cliche phrase, but cash has always been king, and it's been something that's been very prevalent in the current macroeconomic climate. But what we're seeing now is our customers and our prospects are very much looking towards how to mitigate risk, and do they have the appropriate data to help make those kind of risk mitigation decisions.
Yeah. And so have you started to see like arrears levels coming through? I think insolvencies were bubbling a little bit a while back, I think in certain sectors when I was looking at it. But has that economic stress and particularly increasing interest rates started to flow through to the business sector as yet?
Yeah, we've started to see it flow through. Absolutely. I think there is a lot more we're seeing more default, and we're also seeing more focus upon
Mhm.
alerting and an early warning signs, because there is a lot of risk around a default, and a lot of our customers create liquidity through trade credit. So they're trying to make sure that they have the controls in place to say, okay, are we giving credit to the customers with the appropriate kind of risk levels, and are we mitigating against those for propensity to default?
Yeah. And is that sector dependent? So do you see sort of different sectors struggling more than others? So I'm thinking, for example, the restaurant trade or maybe building might be suffering or may suffer more as a result of interest rate increases than, say, the other sectors. Is it sector specific or?
For us, we are sector agnostic, so we touch
Mm,
a lot of different sectors, from building supplies, recruitment, pharmaceuticals, estate management. So we do see trends within those sectors. And I would say that there's certainly some sectors are more affected than others. You touched on a couple there, obviously, the restaurant trade, building supplies and construction are certainly seeing a slowdown, and also higher levels of age debt and defaults. I do think that certain sectors are now looking to where they've had some glory days, so to speak. They're now making sure that they have the right controls, the right technology, more real-time data to react to the current economic climate, for sure.
and I suppose contrasting it with the consumer world versus the corporate world, and what are some of the things that people are looking at in terms of looking at around things like DSO or increasing speed of payment, those kind of things? I mean, what are some of the early warning signs that you'd like flag out?
So it's a lot of it's data driven. So it's having the insights. It's, do you have the right technology? Firstly, to be able to consume the right data, and do you have the ability to create the necessary actions? Real time data is on the lips of everyone we speak to. It's about, do we have the real time information? Is that credit information? Is that payment behavior? Is that propensity to pay? All of this key information needs to be consumed in real time to make the appropriate trigger or action. So that's what we're seeing, that people are really looking at. Do they have the right insights to make the right decisions?
Yeah, and what's your sort of assessment of the current state of evolution as you go into the market? Are people relatively sophisticated, so you're just layering additional sophistication on top, or there's quite a big opportunity out there?
I would say there's a big opportunity. I'd say that the
Yeah.
level of sophistication is not as high as I would have liked to have seen. The number of customers that still, or prospects that still use Excel, there's definitely a technology gap there, but that's where we're excited in terms of where we're positioned. But I do think there's now a big push to overlay the right technology, because, like I say, the insights are key right now, and the only way you're going to gain those insights is with the right technology.
Do you think that reliance on Excel, is that a size of company thing, or is it a length of trading kind of thing? That, I mean, because we all deal with legacy systems, they've been around forever. It was something that worked at one point in time, it doesn't necessarily work. What do you think the driver is? That Excel seems to be just permanently in all of our business processes. We can't get rid of it to a
Yeah,
certain
which
extent.
is
As much as
which
I
is
like
quite
Excel.
yeah, it's quite mind blowing. I do think that there's lots of contributing factors. I think culture is a part of it, in terms of a lot of businesses in the last 10 years have focused very much on top line drive, technology in sales and revenue generation. And
Mm,
accounts receivable had been historically left behind a little bit from a technology perspective, and now it's become a focal point. How can we improve these key metrics? How can we improve our working cap, our cash flow? And I think there's an understanding and acceptance that they need to embrace technology because there are a lot of legacy practice and legacy technology. So I think it's an educational piece as well as a technology piece. There's some great technology out there, but it's making sure that you can change that kind of culture to embrace that technology. There are plenty of credit teams that maybe adopt quite legacy processes. So there's that change in mindset that needs to happen as well.
I think there's probably a lot of credit teams that are Excel wizards and built all sorts of things in Excel, but I suppose it's just whether it's the right tool for kind of the job and where we sit now. What about investment though for the credit teams? And is that starting to ease up a bit in terms of people getting a little bit more funds for investment? Because you make the point there around a lot of it's gone to the front end, and it just feels like sometimes it feels like that back end process feels like it's a bit of the poor cousin sometimes. But are you seeing that kind of change, and what do you think will change? What's your outlook for that going forward?
Absolutely, we're very pleased to see a shift in mindset there in terms of investment into the back office function and the accounts receivable function in particular. I think what will change there is purely business metrics. People are now focusing more on those accounts receivable metrics, DSO, the key metrics that, and you've got to think about it as well. A lot of these large businesses, enterprise businesses, what sits behind them is lenders, PE houses, and again, their shift in profitability and things that are important to them is meaning that there's an increased focus on the accounts receivable function.
Yeah. And how quickly do you think you can turn it around if people have got pressure from increasing interest rates on loans, corporate loans? There's going to be some pressure to try and turn that around, generate additional cash flow coming through the business. What are your timeframes of turning it around? And I suppose if I was to put you on the spot, I'd say, what are the top 5 things people should be looking at in addition to looking for a new system?
Yeah, no, I think time frame is really about the technology you select. Not here to drum our own technology, but other technologies have the data structure enables them to configure and deploy a system more rapid than others. Timeframes, you need to take that certainly into consideration when you're looking at it. IT availability, again, can you get a system in quickly? Can you get it up and running? Can you start generating a return on investment at pace? So I think that's really important. Top 5 things in terms of when you pose that question again, in terms of what businesses should be thinking about? Is that the question?
Yeah, so if I got a challenge in terms of DSO or free cash flow, as you go into businesses, what do you think are the top 5 focus areas to really look at first? Or what are the top 5 areas where you can drive benefits the fastest?
Absolutely. Segmentation is a huge thing. When we go into businesses, process design to create a more bespoke treatment strategy when you're talking about how do we collect cash faster. A lot of these legacy businesses that work on Excel don't have the ability to have more than 3 or 4 workflows and collection strategies. So creating process design about how do I segment my customer base to make it a more effective collection strategy tailored to that customer base is absolutely something we think is a quick win. How do I create automation quickly so that there's 2 areas that I would be focusing on is my users and my customers. How can I make my users more productive? And how can I make it easier for my customers to pay me and improve my digital relationship with my customer? So user adoption is about having a tool that's very easy to navigate, very easy to use, creating automation that's going to remove that highly manual activity so they can focus on the core business tasks, speaking to the customers. When it comes to the customer experience, it's have you embraced the latest technology to enable more mature payment types? Have you got open banking within your facilities? Can my customer self-serve? So if you're really focusing on your users and that user journey to increase productivity alongside am I focusing on my customer journey, I think they're 2 really key areas that will drive rapid ROI and a great business case as to why you need to adopt new technology.
And I suppose a lot of the time when you're talking about B2B collections, in particular, you're talking to account managers rather than necessarily individuals. I mean, how do you think the collections process needs to change as a result of that? And what extra sort of functionality do you need to have to really talk with account managers? Because it's not necessarily their debt, it's the company they work for's debt. Putting, like smaller or sole traders to one side for a second.
It's about, again, having the appropriate technology to sit in
Mm.
between that. So some technology can face ERP so that it acts as a middleware. So an ERP can talk to an ERP. Again, it's having the right self-service capability so it's easy for a customer to respond, to communicate, whether that's disputing an invoice, promising to pay, requesting a repayment plan. It's, do you have this suite of tools at your disposal to make it easy to communicate with that customer?
Yeah. And digital in all of our lives, digital communication, digital contacts become a big thing, particularly in our personal lives from a consumer point of view. Is that starting to come across into the business world as well? Would people rather do things digitally? If you're looking at an account manager, someone's in the receivable function or the accounts payable function, is that digital interaction just as important as it is on the consumer side?
Absolutely. I think having that digital communication between yourself and your portfolio of customers
Mm.
is incredibly important, and it's an ever moving beast, right? It's being at the forefront of the digital channels. We've seen a big push from a number of our customers and prospects for
Mm.
open banking data B2B and open banking data B2C can create huge benefits for both the business and the end customer. And in
Mm.
terms of visibility of spending, availability to trade credit, open banking payments as well. So adopting the latest digital channels, I think, is really important. And like I say, staying on the forefront of those.
Yeah, and I suppose things like emails has probably got a slightly higher visibility than say text would have, although text will be still important for some segments, particularly when you go up smaller companies, I would imagine.
Absolutely. Email is still the primary channel for sending out communication with customers. But again, it's making sure that you have all of the channels available. So you may have a proportion of your customer base that respond far better to SMS than email because they're picking up those SMS, they're clicking on a link and they're making a payment. But it's having that ability to have a bespoke treatment strategy and say this customer type might prefer SMS, this contact type might prefer email. And do you have the flexibility and the level of controls in your automation to make sure the right communication is going through the right method at the right time?
Mm. One of the things that's definitely very prevalent these days is time, and I'm talking about sort of time in the workday.
Yeah,
And a lot of employees, a lot of us don't seem that the time seems to evaporate throughout the day.
yeah.
How do you think that we deal with that? Automation is obviously one part of that, but are you seeing those kind of similar kind of issues with people where they're just too busy doing stuff to actually get to the stuff they need to do? Is that becoming an increasingly pressing issue or not?
Absolutely think it's an issue. I think when you're looking at the credit control function, that's all about prioritization of work and
Mm.
making sure that the key tasks are being created and allocated to the right people. So productivity can be impacted by a lot of admin work. So that can
Mm.
be automated, that can increase the sort of man hours to go on the phone. So it's about having the controls to make sure I can prioritize my team's work. I can make sure that I take away a lot of the low hanging fruit, which is the highly administrative work, so that they can focus on those key tasks. So that's what I say is the main thing. Yes, we do, like you say, we are seeing people struggling for time throughout the day and they want to have the controls to see and monitoring, being having that awareness of how many tasks people are completing, how much time they spend on the phone, having that reporting metrics, it becomes far easier to sit down with the team member and look at productivity when you've got the data to support it.
Yeah. Well, we talked a little bit about digital and digital interactions. Do you think the KPIs or you talked about reporting just there, do you think they're going to need to change as a result of this new sort of digital infrastructure? Do we need to start thinking about the way we measure collections differently as a result of it essentially going digital and getting more automated?
Obviously, the big, I don't think we necessarily need to change. I
Mm.
think people have had to react. Like a prime example was obviously with COVID, big teams of collectors all went remote.
Mm.
Businesses who weren't set up for success had collectors working from spreadsheets at home on their own mobiles. There was complete lack of visibility in terms of, one, how much work they were getting through, the productivity of those kind of remote users, and what their key focus was. So people have adopted technology to enable that kind of hybrid workforce. But in terms of the KPIs and what they're focusing on, I think accounts receivables is very much, how much have I collected? Where is my age debt? What are my age debt buckets? What am I prioritizing? But there are some metrics that are being looked at in more focus in terms of level of disputes, my time to resolve disputes. And again, it's making sure you've got the controls to measure this and the systems in place to help you resolve that.
Yeah. I mean, a lot changed with remote working, where we used to have people in the office and you could see what everyone's doing, you could talk with each other. Now it's much more disparate. Are you seeing people coming back to the office, or is that you're still seeing that this remote working still needs to be facilitated? And so you have to reflect that in some of your reporting as well, don't you?
Absolutely. We are pleased to see. I'm a bit old school that I like to see everyone collaborate together as a team in an office, and we are seeing a move back to the office, but there's definitely an acknowledgement that there has to be that flexibility. I think
Yeah.
all businesses understand that to create that sort of work-life balance, you have to have a hybrid approach. But we've definitely seen collection teams moving back into the office. Like you say, you have to have adapted to say, can I measure my remote workers in the same way that I can measure someone sitting beside me? It's making sure you've got the controls in place to do that.
Yeah, we talk about remote working, given that we're both remote right now. So to a certain
Absolutely.
extent, it definitely has benefits, doesn't it, in terms of
Yeah.
quick video calls and those kind of things. But I suppose it's that balance around whether you're spending that collaborative time talking with each other. But you're seeing businesses starting to think about, at least in the B2B space, like it's time to come back in the office at least 4 days a week or even full time. Is that the theme you're hearing?
Yeah, we're definitely seeing that. I think full time, not in many cases, because
Mm.
I think there's been a bit of acknowledgement that the workforce has created a work life balance, and they're seeing high productivity levels. But yeah, certainly 4 days a week we've seen in a number of businesses we work with.
Yeah, I suppose the world didn't fall apart by us going remote. Business still got done. I suppose there's always that balance there, isn't there? And I suppose as we start thinking about, we talked a bit about investment and getting investment. If you're standing there in front of the CFO, what are the arguments you like best making in terms of to try and get that investment? And this is how it will change, because sometimes that can be a bit of a battle in terms of getting that over the hurdle to say, actually, arrears haven't gone up yet, but we need to do it now, because if we don't do it, then that can be a problem in the future.
Absolutely. So there's building the business case from a kind of financial perspective, which is
Mm,
often the case in terms of how can I reduce my costs by
mm,
implementing the right technology? How can I improve my working capital by implementing the right technology? And there's an element of how can I future proof my business? How can I embrace the latest technology to make sure that I'm future proofing for growth, for acquisition, for agility, really? If I need to scale up, scale down, do I necessarily want to be adding 4 or 5 FTEs where I can actually create automation through technology to get through the same amount of work with my current team? So it's very much the three kind of areas are cost reduction, working cap improvement, and future proofing. I'd say that
yeah.
they're the areas we're speaking to financial directors with.
And if you look at collections teams, and they typically seem to be a little bit smaller on the B2B side, when you tend to have larger ticket items but slightly lower volume. What about interactions with business process outsourcers, DCAs, debt sale, those kind of things? Is that still as keen as they used to be around doing that? Or is it now typically more done in-house, and so using technologies to build the capability in-house rather than using third parties?
We see a mix, really. What we see is what people are looking for is at that point of outsourcing to a third party, to
Mm,
litigation, to DCA. What they're striving for is to have improved visibility. So having a system that seamlessly integrates with the DCA. So at this
mm,
point of the debt journey, my internal team have worked on it to a certain stage. It triggers it being passed to an outsourced third party, and that data is coming back in. So I've got visibility of where it's going.
mm.
So that's the evolution we've seen, is a much more seamless approach. Are they trying to do more with their internal team? I believe so, yes, because you can take them further down the journey with the right piece of technology. But I do see that there will always be a need for third party in terms of legal DCA at some point in the journey. It may be reducing the amount that's passed out to third party, which again is a cost saving, and having better visibility of that, I think, is really important.
And I suppose part of that is like, how do you move the collections upstream so you get that cash flow benefit, which you get in the DSO benefit, which means that what then does flow downstream is a lot less, isn't it?
Yeah, that's just the tail. Yeah,
Yeah.
yeah.
Okay, and so if we look at the future, what's your view around what's going to happen? We're sitting here today; they were just talking about further interest rate increases. Maybe it's tailing off a little bit. Looking at the inflation rate, maybe the inflation rate is softening a little bit, which is great news. What's your kind of view for the future, sort of economic? Where do you think we sit? Because it feels like things should be a lot worse than they appear to feel at the moment, at least generally. But there's a lot of bad news out there. I mean, where do you think we're going to go from here? What do you think is going to happen?
Yeah, I mean, there's a lot of doom and gloom in terms of it's coming,
Hmm.
and the knock-on effect of sustained high interest rates. It's clearly going to have an impact on businesses. We're not seeing the big doom and gloom yet. We're not seeing that filter through to huge amounts of defaults.
Hmm.
There's a lot of people I'm speaking regularly in the space. You talk about those third-party litigators, DCA, that seem to think that number of work they're seeing is increasing, and they
Hmm.
feel that that's only going to increase. We've seen this many times. It's quite cyclical, and people talk about doom and gloom, but does it come? So it's hard. In terms of the trends I see, I do see that people are going to be looking just to have much more real time insights. People do need to be a lot more reactive. I think that's the thing that's really important. Is people
Hmm.
don't know what the knock on effects would be. Everyone's predicting doom and gloom, but they need to be able to react to that.
Yeah.
Do I increase levels of trade credit? Do I reduce levels of trade credit? Do I accelerate my collection strategy? They have to be able to react quickly. I think the fundamentals.
Yeah. I mean, you just don't go to the collections department or even the credit risk function expecting an optimistic picture, because like
No,
our job is to really highlight the risk that might actually happen. So we're almost like we're employed to be doom and gloomsters. Doom and
absolutely.
gloomsters, I think, is the way you'd say it, rather than the optimist. I'm not sure if that does us any favors in the long term, but I suppose it's around mitigating risks, isn't it, to a certain extent?
Yeah, and from a technology standpoint, where you say where's the future, I think people are really now looking at what can we do to start creating predictability alerts.
Hmm.
So we as a business are overlaying AI. A lot of other businesses are looking at AI. So where can I create more predictability so I can have early warning signs and reduce risk, and also identify root cause analysis of issues earlier through the adoption of AI. From a technology perspective, where do I see the future? I see it definitely looking at the likes of AI to make better decisions early.
Yeah. One of the things that kind of concerns me is we've been in this stable environment the last sort of 30, 40, 50 years, which has been relatively predictable, almost particularly at a macro kind of level. And it feels like we've been knocked off balance a little bit, particularly with the pandemic. And like some of the things that used to be taken as accepted norms before doesn't feel like those things are quite the same. So almost like the models need rejigging quick more than they would before. The slightly different cuts and segmentations of what before. And I suppose it's just like, how do we best adapt to that? And I suppose react to that. That's where you're seeing AI as being a potential area in terms of, I mean, do you think there are going to be new segments?
Yeah, absolutely, I do. And that word you used there is react, is the
Mm.
agility. I think people don't know what's coming, but am I prepared for, am I agile enough as a business to react to change? I think is the
Mm.
key. So I think that's something that everyone is monitoring constantly. Say, what is the change? What is the macroeconomic outlook? How are we going to react to that? Whether that be banks, businesses, enterprises, how can I change to current climates?
Mm.
Because we're talking today, and I think that the economic climate will look very different in 12 months' time.
Yeah. One thing we didn't talk about was how much APIs have changed the industry to a certain extent. You talked about integration between systems or integration between providers. Where do we currently sit in terms of like API integration and sort of like how much is that changing and how much further have we got to go in terms of integration of different platforms really across the customer life cycle? I know we've made progress, but what do you think the current state of play is?
Yeah, I think that's constantly improving. I think when we look at deploying technology, we always look for API first for that real time connectivity. I'll be transparent in some cases where it's difficult to connect up to a third party. We sometimes use flat file just for kind of speed of deploying a software. But yeah, I think APIs and connectivity to APIs are becoming easier, and they'll continue to become easier,
Yeah.
and there'll be more and more out of the box connectivities. It's definitely the way things are going. Yeah, we're happy with the way the outlook in that regard in terms of the real time nature
Well,
of getting access to data.
yeah, I remember the days when SFTP was like the cutting edge of being able to actually share information between computers. Was like that was it. And just
Yeah.
think about where we've gone from here. And I suppose, yeah, linking that through, which is an enabler for AI, isn't it, as well? Because you can actually share the information, you can share it, more detailed information. What do you think some of the use cases that you're looking at from an AI point of view? If you're looking at in 5 years' time, what will be the case studies will say, look, looking back on, this is the places where it can best be used?
Yeah, from our perspective, obviously we're very much focused on the accounts receivable life cycle and how we can overlay AI into our tech stack. And the use cases we see is recommended treatment strategies. So you may have a customer that is on a certain treatment path, but an AI recommends that you pivot, and because of some data that it's consumed, whether that be an alert from a credit bureau or a change in payment behavior, the AI recommends an immediate change in treatment strategy. Again, identifying blockers is something we're looking at. So if something's going along a path and you can see that the time taken to complete a certain action is increasing, the AI will change that strategy. So we're keeping it very much to our workflow engine. How do we overlay it to that to improve that sort of communication with the customer? And recommendations is a big thing. I'm an agent, I'm a collector. The AI would recommend this is the action I should take. So it's not always about workflow automation. It's about how can I recommend the correct action for my agent or collector to take.
Yeah, I know sometimes we get very excited about new technology that comes along, and it actually takes a little bit longer for it to actually mature into, particularly into the financial services world. But I do think it's quite interesting what's going on at the moment. Everyone's been talking about it, haven't they? So
Yeah, it's the auditability of AI, which is I think been the blocker, and why we've been dipping our toe in and making sure that we're very comfortable that you can audit the AI, because the types of businesses that we deal with, they need to be very comfortable that they can audit a decision that was made by the AI
yeah,
engine.
yeah, yeah, yeah. Okay, Billy, thanks very much for making the time. I appreciate it. It's great to hear about what's going on in your space and hearing a bit more about the business and the credit control world. Interesting how some of the same themes keep on coming through in terms of like systems, automation, and it does feel like a lot of people are starting to invest now for what could be a bit of a bumpy future, at least anyway.
Absolutely. No, really appreciate you inviting me on. Yeah, great to speak, and
Yeah,
speak shortly.
thanks very much, Billy.
Take care. Bye now.